So you just need 3 months full-time job and you're good. You're good. Approved. They are putting things in there that are totally unverifiable for these Canadian mortgage insurers. And is the borrower likely to be honest about all their debts that they're holding outside Canada? Pension money is at stake here, and it is basically riding on all these dodgy subprime mortgages. I mean, it is honestly shocking when you really think about it. Mortgage insurers in Canada are competing for the lowest credit borrowers possible, and they're gambling your pension money along with it. So let's get right into this. I mean, this is just absolutely shocking. And it was one of you guys that actually sent me a message about this because you got a presentation on this. And what was really eye-opening to me, and the first major red flag, was the fact that you can be on a work permit with only 163 days remaining, and you can qualify to get a 25-year or a 30-year mortgage if it's on new construction, which is insured by none other than Sagan Mortgage Insurance. So we're going to get into some of these mortgages, and you are just going to be completely mind blown by how little they actually require and how they are targeting immigrants. But what I first of all want to say is this is just all part of the cycle. The riskiest loans always come at the end, guys. They always come at the end, and it is insanely risky right now. So this is called the New to Canada program. Qualified home buyers who have emigrated or relocated to Canada within the last 5 years are eligible under Sagan's New to Canada program to purchase a property with as little as 5% down. 1 and 2 units, 95% LTV, which means 5% down, includes both purchase and improvement amount. And basically, you can buy a house up to $1 million with this. So property value must be less than $1 million. And if you look at average home prices in Canada right now, $719,000. And bear in mind that home prices haven't increased since 2022. So over 2 years now, home prices haven't been increasing, and they're coming out with these absolutely really dodgy mortgages. So what do you need? What qualifications do you need to be a borrower here? 3 months minimum full-time employment in Canada. Borrowers being transferred under a corporate relocation program are exempt. So you just need 3 months full-time job and you're good. You're good. Approved. It's just absolutely crazy. And then credit. In the absence of a sufficient credit report from a Canadian credit reporting agency, Sagan will establish creditworthiness in one of the following ways: International Credit Bureau, or document irregular savings, letter of reference from a recognized financial institution endorsing borrower's banking experience and relationship. I mean, that is very crude. You've just got to remember that. And guess what, guys? When you really think about it, just this one here, if you're getting this from India or China or a place like that, how are they going to even look into that? Like, how are they honestly going to be able to verify that? Of course, they're not going to be able to verify it, and they're probably not verifying documents anyway. So it is really interesting. I mean, it goes to show, like, if you can get a 25-year mortgage and you've got less than a year left on a work permit, that kind of says something about the mortgage that you're offering, or the mortgage insurance that you're offering, which obviously then puts the lender in complete moral hazard mode. So must have immigrated or relocated to Canada within the last 60 months is a requirement, and must have a valid work permit or obtain permanent residency. And again, it doesn't say about that 163-day rule there, but that is the case. And then I just want to show you, Sagan is actually owned by Brookfield, and obviously Brookfield is heavily involved in commercial real estate. And then if we look at Canada Guarantee that I've been through many times in some of their mortgages, again, it's going to be completely mind-blowing. You've got the government, the CMHC, which is a mortgage insurer. You've got Canada Guarantee, and you've got Sagan, all just competing for the worst subprime, dodgy borrowers that you can possibly think of. So again, Canada Guarantee has a competing mortgage insurance here. Canada Guarantee's Maple Leaf Advantage provides new immigrants who have limited documented credit history the opportunity to purchase a home with as little as 5% down. I mean, this is just insane. And the requirements here are even more insane. So the credit requirements right here, but I highlighted option 4 because this just could be faked so easily. A letter of reference from the borrower's financial institution from the country of origin confirming a minimum 6 months satisfactory banking relationship. I mean, that doesn't really confirm anything. And when you think about, most of the immigrants in Canada are coming from India and they're coming from China, you can think of the type of banking institutions that these people are actually dealing with. And are those banking institutions that you would think, yes, those are rock solid institutions, although they're probably, they've probably got more reserves than even Canadian banks. But to base the mortgage insurance qualifications off a foreign bank's relationship with their client, it just shows the risk level that these mortgage insurers are prepared to take on. And again, they just provide massive moral hazard for those banks to go and lend because they think that, hey, the mortgage insurance is just going to cover it, so we don't need to verify anything here much. So borrower's qualification, borrower required to have a permanent resident status, landed immigrant status, or valid work permit. So they're saying practically the same thing here. And I just laughed at this as well because all debts held outside Canada must be included in qualifications. Ratios, like people are going to state that, and like they can even track it. I mean, this is the absolute hilarious thing about all these. They are putting things in there that are totally unverifiable for these Canadian mortgage insurers. And is the borrower likely to be honest about all their debts that they're holding outside Canada? I mean, I don't think so. So that is the Maple Leaf Advantage program. And just so that you know, guys, Canada Guarantee, they're comprised partly of the Ontario Teachers Pension Plan. Yes, that pension plan that invested in FTX. And it was only a small investment, but it shows the due diligence that the Ontario Teachers Pension Plan does. So pension money is at stake here, and it is basically riding on all these dodgy subprime mortgages. I mean, it is honestly shocking when you really think about it. Low doc advantage. The low doc advantage is designed for borrowers who are self-employed and have established a strong credit profile. This program allows borrowers with limited documentation to obtain mortgage insurance through a simplified process. Again, let's get onto the borrower qualifications here. So you just need to be self-employed for a minimum of 2 years here. And obviously, again, like this can be faked so easily, this documentation. And again, it would be very difficult for Canada Guarantee to go and verify their income if they are employed by themselves. So absolutely crazy. And then the last one, I mean, I've saved the best till last here, the Flex 95 Advantage. The Flex 95 Advantage program offers a flexible down payment option for borrowers with a strong credit history. The borrower may access 5% equity from sources not covered in our down payment advantage program. Examples such as loans, credit lines, all those different things. So basically, they're offering mortgage insurance so that you can have a zero down mortgage in Canada. It's not technically called a zero down mortgage, but it is because if the borrower can just borrow the down payment from a credit line, and then they can get mortgage insurance and actually qualify. Like, they're not lying about where they got the funds or anything like that. They're being upfront and they're telling Canada Guarantee, and then they insure it. Again, I mean, this just shows the absolute lunacy in the Canadian mortgage and lending space right now, as they are competing again for this dwindling supply of subprime buyers, essentially. And again, they need to get more and more risky people into that housing market, and they've relied predominantly on investors for the past 4 years, and they just need to get more and more risky people in. And this comes at a time where home prices again have been declining for more than 2 years now. So what does that say about the risk? It's not like the mortgage insurer is sat there and they're saying, well, you know what, home prices only go up here, so if everything goes south, we'll just be left with an asset that is actually worth more. Because for the past 2.5 years, you've seen the complete opposite. You've seen the asset price actually decline, so actually they would end up owing even more, and that's if they even pay out. I mean, I'm just predicting what is really obvious here, which is a lot of these mortgage insurers are not going to be able to pay out, and they're not going to pay out. They're going to deny a lot of these claims exactly like normal insurers do, saying that the banks didn't verify all these different things, or they didn't check this one dot off on the application. And you can imagine that this thing is going to blow up massively with the amount of risk that is in the system. Because again, when you look at what's happened for the past 2.5 years, it really doesn't look good. And then when you're doing all these dodgy types of mortgages, and you've even got things like the Ontario Teachers Pension Plan, you've got pension money that is riding on this. And of course, it's not just these two, it's also the CMHC, which is taxpayer funded. This whole housing bubble, you can see what a precarious place it's in right now and what a bad position it's in. And it's no wonder that they're fighting for the riskiest of risky borrowers, and they just keep pushing into more and more risk. That's exactly what happens with these bubbles. That's why you had the blow up in the global financial crisis in the United States. Again, it was because of mounting risk that boiled over in the system, and the same thing is going to happen in Canada because the risk is exactly the same. And I'm just proving to you that those exact same dodgy loans are out there. They're just in slightly different forms. So it is absolutely crazy what is going on. So if you've enjoyed this video, I'd highly recommend that you check out this video here. And then if you're looking for a VPN to protect your privacy, go to expressvpn.com/marketmania, affiliate link in the description, and I will see you in the next one. Take care, guys. Bye-bye.